Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, November 3rd, 2010. This morning I'm talking about one down, one to go. Last night, the elections here in the U.S. came and went, and everything went primarily as was expected. The balance of power in government has changed as Republicans picked up the House of Representatives. All right, now what this does is this provides, the means for checks and balances, which is really important to have a balanced and functioning government. I mean, whether or not you agree with current policy that's going on in the U.S., I think everyone can agree that it's not appropriate for one party to be running around with both the ideas and the checkbook. So, that's sort of what we've seen here in the U.S. As of late, and the political tide's changed. This hopefully is going to help bring some confidence back to the market, and hopefully that's going to bring about some new business, which hopefully will bring about jobs. So that was the idea behind this election, and that was one of the reasons why Republicans in the House were able to get such a landslide. But again, all of that was expected, and they really didn't have any major impact on the markets. It was just business as usual. So the idea, though, is that we're not out of the woods yet, and the reason I say that is because today we're going to get the FOMC meeting, where Bernanke, the Fed, is expected to announce the size of QE2. That's further monetary easing, quantitative easing, if you will, for the Q. So the most common expectation I've heard around the market is that they're expecting total size to be around $500 billion, spread out maybe $100 billion a month for say 5 or 6 months. All right, so this is what the market's expecting, and as a result, we've seen dollar weakness going, for the last couple of months now, or the last 2 months. But what I think we're going to find is that if it does come in as expected, this may be a case of buy the rumor, sell the news, and we could actually see the dollar strengthen from here. Should the figure come in lower than expected, then I think we'll definitely see the dollar strengthen here. And then should it come in greater than expected, I think we'll see continued dollar weakness. So in my opinion, we're setting up for two scenarios where we can see dollar strength, one where we'll see dollar weakness. Now, that's in the short term. What the actual long-term ramifications are of quantitative easing still remains to be seen, because we don't know, what's going to happen with inflation, what the Fed's going to need to do as far as are they going to need to change interest rates, or are they going to have to change policy? Now, through this election, the idea was that fiscal policy is going to be reined in a bit. So, perhaps Bernanke thinks that by just flooding the market with more dollars, that's going to increase business confidence, and I don't think that's going to be the case. But we're going to have to see what happens. I think regardless of what the size and scope of this QE2 is, though, is that people are expecting that commodities are going to move higher. So we're going to have to see what happens with that. So I just want to take a look at the markets real quick, see how they're reacting. All right, we've got the Aussie, which is lower this morning, which is a little bit surprising, despite the risk appetite in the market. Right now, we've got stocks higher, commodities higher, oil's trading around an 85 handle. I think it's just below. All right, you can see here that the Aussie just got up to parity, where it acted as resistance again. It sold off. Now, they had building approvals, which came in much worse than expected, and now the market's starting to come around the sentiment that perhaps the RBA may have acted too aggressively in raising rates. Okay, in light of the fact that the FOMC meeting hasn't occurred, and they don't have the rampant inflation that they may be expecting. So they may have taken a step a little too far. I just want to show you here, we're going to look at dollar versus CAD. This is a loonie, this Canadian dollar. All right, just look at it in the 1 hour chart. Okay, and you can see here we've had a nice little downtrend here for dollar versus loonie. That's been loonie strength. So that's been kind of a nice chart. It's at a 2-week high of the dollar. Just want to show you the euro. The euro is actually lower than dollar, okay, but we're still holding above the 140 mark here. Okay, and that's acted as resistance before. This could be support. All right, we're going to look at pound. Pound still holding up above 160. Okay, now both in the Eurozone and in the UK, they have their rate policy decisions tomorrow. Now, nothing's expected to happen in the Eurozone, okay, but they still have their debt problems over there, and it's sort of taking a back burner to today's FOMC meeting, but I think yields on Irish bonds are now at all-time highs, so we're going to have to see what the statement is from the ECB, but they're not going to change policy. Now, the pound, on the other hand, they've got a more interesting situation because, their Bank of England board is sort of split three ways on what they should do about policy. You got one guy saying raise rates, you got another guy saying more quantitative easing, and that sort of leaves you in the middle with, okay, they're not really going to do anything. But let's say, for example, that the FOMC comes out today and the quantitative easing is much larger than expected, sending the dollar careening lower and pound higher. Well, they may say in the UK, hey, wait a second, pound's awful high right here. Maybe if we just announce that we're going to do some quantitative easing, that'll bring the pound back down a little bit lower. So, we're going to have to see if there's any reaction to, this FOMC meeting and what that means for these other currencies. I just want to show you dollar yen. Here's something interesting, and I'm not sure exactly how this happened, but if we look this morning, change the chart here. Okay, you can see nice move on dollar yen, dollar strengthening versus the yen, right at 8.15. That was right as the ADP jobs report came out here in the U.S., which showed better than expected jobs growth. Now, I'm not exactly certain why this is so yen negative here, or why the yen should be weakening. So we see it here. You can also see it a little bit with the euro. So yen's noticeably weaker. We talk about Japanese interventions and market operations and things like that. Perhaps they decided they wanted to help this a little bit along prior to this FOMC meeting and figured using a data release point was as good a time as any. So not really sure what's happening there. But don't forget that in Japan they moved up their rate policy meeting to potentially counteract any changes that happen in the yen as a result of the FOMC. So that's what we're seeing today. Yesterday's elections proved that the country wants to get back to fiscal responsibility, which hopefully is going to grow the economy and help people get jobs, move forward. We have the non-farm payrolls report out on Friday, which is probably going to be too soon to really see if the impact of the elections had anything to do with the NFP number. But going forward, I think it's going to change it. ADP number was a little bit better than expected, so that's a good sign. And hopefully these politicians can find a way to work together, get the economy back on track. So that's what we're looking at today. 2:15 Eastern Standard Time is the FOMC meeting. I expect there to be a lot of volatility going into it, and it's just because of the short-term nature of trading. People jockeying for position, putting themselves ahead of it. Don't forget that while the European markets technically close at noon, I'm sure those traders are going to be hanging around for the extra 2 hours to see what happens, but there could be some positioning around that time as well. So, just keep an eye out. Just remember, be careful. The volatility could be very great, and we'll just sort of have to see what happens. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.